Welcome back to the Investor Professor podcast. This is Dr. Ryan Peckham, and this is episode 177. On today's podcast, I'm joined once again with Cameron, and we're going to discuss the market, where we're at here. We have Elon Musk, $1 trillion pay package. We have the government shutdown. We have corporate earnings wrapping up, and we have a market that had a really bad week, and we will discuss strategies and kind of our thoughts on the market heading into the end of the year. So, as always, get your mind right, and let's get to work. Welcome back to the podcast, everybody. Cameron, welcome home. It's like having a son come home from school. How's graduate school treating you?
Feels weird to be back. Good. It's been quite the experience. I'm week 7, I think, week 7 or 8. I'm doing the traveling back and forth between DFW and Chicago. Racking up those miles.
Yeah,
I got some status now. I now know what you feel like.
Yeah. I bet that definitely helps. Have you we'll talk about the government shutdown here in a little bit, but have you noticed, since you've been traveling?
So I was really worried about that. We're filming on a Sunday. I flew back last night, and I flew back last night from Chicago. I flew to Chicago Friday morning. Smooth, not anything crazy. O'Hare Airport was packed, but there wasn't any cancellations or delays yet. Last night there was some delay for sure, but I think everyone were super scared about their flight being delayed or canceled. So a lot of people just canceled their trip because the airport was a ghost town.
Right.
But
what time did you fly back at? Late, right?
Well, I was supposed to fly back at 6:45, and I ended up leaving at 9:30.
Okay.
So it delayed a good bit.
Yeah.
But the plane was almost empty.
Yeah.
So I think people they don't want to be stuck on a runway or a taxiway, which I get.
Well, you see those videos. I mean, we've all seen different airports, and it looks, vacant or whatever.
Yeah, it's vacant right now. TSA was easy. I didn't notice a single difference. I know I've read some airports are shutting down the pre-check line just because they can't staff it, whatever.
Right.
I didn't notice that one bit.
Yeah. Well, how's the school stuff part of it going though? You enjoying classes and all that?
It's awesome.
Yeah.
It's an awesome experience. It is new though. It's new to be a student again.
Yeah.
And so studying, I'm studying on planes because that's how it works, right? Friday rolls around, you forgot a homework assignment.
Yeah.
So studying on the plane, but it's been awesome. The amount of the people that I'm in the class with are mind blowing.
Yeah.
So many different backgrounds. I thought a lot of investment banking, a lot of consulting, tons of different backgrounds, which has been super cool.
Yeah. Yeah, it's when you're doing this, when you kind of get in the groove, you don't realize how fast a week can go.
Oh, I
mean, it's just, Friday to Friday, you're like, oh, I'll do it in a couple, I'm going to relax a little bit. I'm going to take a day, and then all of a sudden it's oh, you got one day to get all this stuff. I mean, it just speeds up.
Time is flying by. And I think the thing that's been most difficult with the MBA program is there's just so much to do.
Yeah.
And you have this thought in your mind of okay, I'm spending a lot of money to be here. I want to make sure I'm getting a return on my investment. Yeah. And it should be fun. And it is. A lot of it's fun when you're there, but after you're in class for 10 hours all day.
Yeah.
The odds of you going to some networking event when you just want to close your eyes for a second.
Yeah.
It's difficult.
Yeah.
But showing up, coming out early, doing the lunches together, the Friday nights, the club events, stuff like that. It's how do you get the most out of it? That's been the toughest part, is just allocating time.
Yeah. I mean, that's what you hear about a lot of programs, especially when you're going back to schools. You'll hear they'll say programs are what you make of it, right? You can.
Oh, yeah.
I mean, that's why everybody's experience is so different. What do you say yes to? What do you say no to? Do you put yourself out there? Do you say yes? Do you try to, really, engage with the different people that you're surrounded with? Because it does. It's it's a lot, but then it's over quicker than you think it will be.
Yeah, no, it's definitely, that's what everyone keeps saying is how quickly it goes by. And I'm already noticing my weeks are flying by.
Yeah.
But going back to the people I'm meeting, I kind of knew this, but I didn't know the impact of it. But Northwestern, the Kellogg Business School is the number one program for next generation family business owners.
Okay.
So if you're preparing like your son or somebody
Somebody take over.
somebody to take over the position, this school has built programs around that.
Okay.
So I met some really cool people. Like I was telling you earlier, I met
Mhm.
a guy Friday night. They have like this happy hour at the main campus just so you can interact and meet all the people that you wouldn't have because you
Yeah.
didn't have classes or whatever together. And his family business been around for over 100 years, and they manufacture staples. They're based out of Mexico City. They are the number 2 manufacturer for staples in North America, which is insane because like you wouldn't. The odds of I ever would know about the staple business slim.
Right, yeah.
But
yeah.
now I know profit margins are low, 6-7%. He's white
Yeah.
labeling certain things, like the difference between steel and using some kind of mixture of metal and how that impacts the customer experience. Like I never would have figured that out unless I started talking to
Well,
him.
and it probably should like too, like you wouldn't expect a business like that to be that detailed, and they have it like completely down to,
Oh my gosh.
you know, yeah.
Yeah.
If we use this metal, this is the problem. If we use this metal, this is why we got to use this metal. I mean, I'm sure like it really gets pretty detailed pretty quick.
Yeah, and it was surprising. Like I was asking him, because I would assume, like, so his staples are made out of steel, right? Like that's not an easy process. You probably have to have a lot of hands in the business, especially if you're number 2.
Sure.
And the whole question there is like, who's number 1? It's like you
Mhm.
don't want to be number 1 because they're just a cost. Like they're just trying to make the cheapest product, which
Correct,
is why they're
yeah.
number 1.
Right.
But yeah, 150 employee business out of Mexico City.
Wow.
And they are the number 2 supplier of staples in North America, which is,
Yeah.
I told him, I looked at him, I was like, 5% profit margins. You got to sell a lot of staples. He looked at me and said, man, you have no idea.
That's funny. Yeah.
So crazy.
I'm sure they are. Well, we stand here this past week, the market, I mean, the NASDAQ got rocked the past week, but year to date, S&P still up 14, Dow Jones is up 10, NASDAQ still leading at 19. A lot of pressure seems to be coming into the market. We can talk about Elon Musk's pay package. We'll talk about Michael Burry shorting Palantir, NVIDIA. Some of these, are AI valuations too rich? I don't know. I mean, like this past week was a bad week, but it's almost like it's a good thing for it to be kind of a pause on some of this because we've had such a good run. So I'll let you pick. What do you want to talk about? Do you want to talk about Musk? You want to talk about Palantir, NVIDIA, Michael Burry? Which one do you want to go with first?
Let's start high level and then work our way down to that. So just like the market kind of sentiment, if we could stay there for a second.
All right, go for it.
Right. So like the week has been kind of tough.
Yeah.
Roller coaster for sure. We had some numbers come out. So like the consumer sentiment number came out, lowest it's been since they started raising rates, lower than it was when COVID hit.
Yeah,
Right.
right.
And so what's that tell us? It tells us people are just not optimistic about the economy right now.
Right. Yeah.
So how do you think, just like from your point of view, how have we ended up here?
I think that I think part of that's going to be the government shutdown.
Okay.
Which is, kind of an overhang, whether we want to admit it or not. That's an overhang on the economy. You keep hearing about a K-shaped economy, which is people at the high end are doing well and people at the low end are doing worse.
Mm-hmm.
And so I think you start to see some of that. And yeah, I definitely think that that's starting to impact, when you see as far as not as many job openings, you see a little bit of layoffs happening. And yeah, I mean, I think that starts to wear on people.
Yeah, I also too like that's the retail side, right? I'm wondering what a lot of these institutions are doing now. Like, are people like usually we see kind of a pullback, maybe not this early, but coming up because they're tax loss harvesting, that kind of deal,
right?
And I think a lot of people are just, hey, I'm cashing out now, or I'm at least starting to trim a little bit,
right?
Earlier than I should.
Well, we just passed the bull market that we're in. Basically, we hit the 3-year anniversary a couple of weeks ago.
Crazy.
So now we're in the 4th year of the bull market, which is coincidentally from that June 2022 mark that you just talked about with consumer, sentiment.
Yeah.
And so, we've been on quite a tear here. It doesn't mean that we have to have this massive sell off and we have to go all the way back down like we did in 2022, but it just might mean that we trade sideways for a while.
That's what I was getting at. I think I don't see a whole lot of, hopefully, movement I think no movement right now is good.
Yeah.
Till February.
Right.
Right. Like I think going into, we got the holidays, all that. February comes around. Maybe we see some Christmas numbers, people spending. We'll see what that impacts.
Yeah.
But I think if we trade sideways the next couple months, I think that would be good for us.
Yeah.
I really do.
It's interesting that you say that because we still have, like, for the most part, most companies have reported earnings, but we still have one big one left.
Yeah, Christmas, all the holidays.
Well, but also we have NVIDIA left to report earnings.
Company-wise, yes.
Company-wise, right?
Yeah.
So we have NVIDIA to report. I think not even this week. I think it's actually the next week, right before Thanksgiving. NVIDIA reports earnings, so that one's going to be very important. But yeah, I mean, trading sideways for a while is not a bad thing to digest some of this data. I mean, the reports. I mean, the amount of money that's being spent on data centers and things like that. I mean, I get that people want to say, oh, this stuff's ran quite a bit, but I mean, that's where the money's going. I mean, sometimes you have to follow the money. And they're not just going to stop spending on a data center because the market isn't doing well for 2 months. I mean, these are massive commitments being made.
Yeah, and we talked about this earlier in the week. Probably didn't plan on this, but good to bring it up. Is everyone's focusing on Palantir and all these companies that have crazy PE ratios, and all these articles are coming out. Like I'm sure you have clients too that are sending articles of like people are shorting the stock, people are selling off, like it's a major bubble, whatever it is. And then you like, okay, contextually, what does this actually mean? You go look at Amazon, right? The highest PE ratio in their time was like 800, low 800s or whatever it was.
I think that, this is our conversation, but I think it was 995.
Yeah. Okay. So like if you saw that and sold out of Amazon at that time, you would be bumming right now.
Yeah.
Because you missed out on all these gains. So it's, if you ever solely invest on just PE ratio, you're missing out on all the big winners.
Yeah. Well, the problem is like, I mean, let's just get into it. So Palantir reports earnings, great earnings by them. The growth acceleration is tremendous. But the knock is it's an expensive stock. And so I think one of the biggest misnomers with that PE ratio, especially when people write about it or whatever, is it's just one number and they give you no context to what it was either a year ago or a month ago or whatever. So Palantir, before they reported earnings, their PE ratio was like 660. Mm-hmm. They report earnings and their PE ratio drops to 400, which is crazy high. I mean, I get it. I'm totally not saying that that's not a high PE ratio, but to drop it 200 points with one earnings report shows that the amount of growth they're having is absolutely incredible. Yeah. And so, you look at that and we had that conversation. I said, well, go look up what Amazon's highest PE ratio was, which is like 995. And then all of a sudden it's like, well, most of the best companies in the world, at some point, they're going to look expensive. I mean, go look at NVIDIA, same thing. If you go look the last couple of years, I mean, their PE ratio has dropped a ton, but NVIDIA has had more sales in the last 2 years. They went public in 1999. They've had more sales in the last 2 years than all of the other years combined.
It's crazy.
I mean, it's an absolutely ridiculous number. And so you see that, we pair that with Elon Musk and them saying, hey, is he worth $1 trillion? Can I say that, Dr. Evil Eyes? $1 trillion. But there's certain metrics that he has to hit in order to make that happen. Yeah. It's not just that he doesn't just get $1 trillion. I mean, the amount of stuff he would have to do to make this happen, if you're a Tesla shareholder, I mean, it was voted on by 75%, which that was actually a higher margin than I thought would have passed it. I didn't think he'd get 75%.
Neither did I. What does that tell you think?
I think it tells you that when people invest in Tesla, it's more of an investment in Elon Musk than it is the actual company.
Yeah, 75. Like, he's been great at that like network effect with his retail investors. Yeah, the people are on the Tesla train; they are diehards.
Right.
I don't think that makes up 75%. I think that makes up half of it.
Yeah,
I see that and I think, oh, there's actually some institutional money that
it has to be
thinking, oh, I'm on this Tesla train too. So
it has to be BlackRock or somebody voting those shares.
Usually that doesn't happen. No. Institutional money does not make emotional decisions like that.
Yeah.
So there's some, I mean, I don't know if you want to go over the specifics,
go,
but
go,
like,
tell the audience.
Okay, so
let's hear what some of the things he has to do.
This is just some of it because it is a long list, but Tesla must raise its market valuation from its current level to 8.5 trillion by 2035.
Okay. So 2035, they got to be worth the market cap of Tesla has to be 8.5 trillion.
Yeah.
Which NVIDIA just became the most expensive company or the most highest valued company at 5 trillion.
Yeah.
So Tesla, I mean, where are they right now? Let me see.
Not near 8.5. I mean, that
No.
seems like a crazy. And also too, the other part of that is like the market determines that. It's not, you know what I mean? Like,
Yeah.
the market is going to determine whether that company's worth 8.5 trillion. So it's not just earnings you have to progress, but there's investor sentiment that they're going to have to focus on. How do they keep that strong?
Yeah, they're currently at 1.4 trillion.
Yeah, see, that's crazy. Company must deliver 20 million vehicles over the next 10 years.
Okay.
Tesla must deploy approximately 1 million robo-taxis into operation.
Okay.
Tesla must produce and ship 1 million humanoid robots. That's the big one that I think everyone's trying to focus on.
Because they haven't shipped one.
And also the pricing. They're going to have to figure out pricing on that, right? Like, it's not everybody's going to have a $30,000 robot helping clean their dishes. It's an expensive robot. So, and then Tesla must gain about 10 million full self-driving software subscriptions. So it's like, I don't even know what that number is now, but there's a long list here that I'm looking at of things that he needs to hit. And it's in line, like, right? You know, his big thing was, I want to have ownership in the company that when I do hit these goals, I can determine like the growth and what we're going to invest in a lot of this.
Yeah.
Not just I build it and then the market decides what are we going to do with these humanoid robots. So I see that as a positive thing.
Correct.
Because if you came out, I mean, he's already made so much money. Like, it gets to a point where it's like, what's the difference?
Yeah.
Like, he wants to control it, which I find it admirable. I'm not saying I'm an Elon fan by any ways, but I think that the way he's quite the entrepreneur.
Yeah. I mean, it just shows how important he is as a, you know, as a leader to the company and how much people want him. I think it's also is that they want him to be dialed in, as the kids would say. You know, it's like me and you, like, we're both billionaires, right? So there's not a big difference between 1 billion, 2 billion. I mean, he's got to get the motivation from somewhere else.
Clock in. I think you take a clock in, right?
Yeah. I mean, he's got to, you know, he's got to. How do you keep somebody motivated? Like, I mean, that's the thing, is the motivation's got to come from somewhere else. This pay package is one thing. I think it's more about him being able to vote and having a say in the direction of the company more than just the dollar amount. Because you're right. At some point, I mean, you know, what do you buy the Atlantic? I mean, with 1 trillion, do you buy the Atlantic Ocean? I mean, what do we? I mean, exactly.
But there's also a lot of question too. Like, everyone's questioning his ability to keep it going. Like, can he be, you know, still invested? Can he be still focused? And I don't know what, you probably know what it's called, but there's like a behavior thing where it's after you hit a threshold, the likelihood of you falling behind is like nothing, because you've already invested so much in this. Whatever it is, you're so focused that there's going to be no deterioration because you've already surpassed all these points in time where you should have deteriorated.
Well, and I think too, like, I think it bodes well, like Musk doing this bodes well for all these other like chip companies. You know, he was on there, you know, the other day talking about how many chips they're going to need for all these, you know, humanoid robots and things like that, where they're probably going to have to like develop their own fabricator, and they're going to have to do, because they're going to need so many. Yeah. So for just, you know, companies like Lam Research, LRCX is their symbol. You know, these companies that actually produce the machinery that produce these chips. I mean, it's just such a big industry. I'm reading a book called The Current Wave. Is that what it's called? I don't want to really talk. I'm just kind of started it, so I'm not going to go into it too much, but just to throw it out here. But The Coming Wave, which is just talking about AI power and our future. And just the amount of how important this is going to be. And, you know, you've heard Jensen Huang and all of them talk about it being the 4th industrial revolution. I mean, it's just incredible. Like, I mean, it's going to impact so many different industries, which that's not to say, like, you hear the market and you hear everybody saying that it's overvalued and all this kind of stuff. It doesn't mean that things can't get overvalued, but it's definitely going to be, you know, something that we're going to grow into over the next couple of years. And so it's hard to say, like, I'm investing at the top. Well, I'd rather invest at the top and leave myself the ability to invest more if it drops than to miss it.
Yeah.
I guess.
Yeah. And there's the big question too. Like, everyone keeps focusing on, you know, us. I don't know why we're at this point, but it's like us versus China, right? Like, it's the AI race. And it's not just Elon. There's a lot of hands in this fire that are like really producing a lot of crazy stuff. I don't know if you saw, but there was a company it's called XPeng out of China that is producing humanoid robots. They're going to be one of Tesla's competitors.
Right.
And they did a live demonstration of their robot called Iron. And it was, for whatever reason, I don't know how, I didn't watch the live demonstration, but I watched clips. The robot was walking such like a human, like it was incredible, just the way it was able to operate so, humanistic, that the crowd was like, that is a person in
Inside
a white, yes. So they had to cut the cloth of the leg to show that it's not a person. This is actual robotics.
Yeah.
And I think we're seeing like some of that advancement, like this last week, I forget if it's like Claude 2 point something or whatever it is.
Yeah.
But their back engine, they've switched it now to a Chinese model because it's been so effective.
Wow. I think that, we really haven't considered what it's going to be like when you have some of these humanoid robots that can literally work in the dark 10 times faster than like you or I.
Yeah.
Like building something, doing a road, doing, think about like just some, just working all the time, faster. I mean, it's really incredible to think about.
Yeah, it is. It's, people will say how scary it is. What's that movie with Will Smith?
iRobot.
Yeah, I think about that sometimes. It's like that would be a little. Hopefully, we got a Will Smith out there that's there to save the day if we have any issues.
Yeah, I don't know. I mean, it's it's so
maybe
hard.
It's Elon. Maybe it's Elon. Elon's the guy, right? Like I think that's why he was pushing for this pay package so much. That way he can have it. Was it 25% stake?
Yeah,
so you control the output of those bots.
See, I think about Elon, and I think about him, not even really that concerned about the cars anymore because he's so focused on the humanoid robots. I mean, because he talks about, he's like, I think it'll be the greatest product ever produced.
Yeah, the cars. I mean, they've been successful, but I forget the number he said for Cybertrucks of how many he wanted, the goal that he had sold.
Right.
But it's like, what did they 18,000 this last year?
I don't know. Yeah, I don't
18,000, and their goal was like millions.
Yeah.
He's just an ambitious person.
Yeah, he is. I mean, yeah, he is, and maybe he should have. The design of the Lego brick.
That's what we're calling it.
The Cybertruck. I mean, I don't know. I mean, it's
Yeah, it's funny. My brother owns a Model Y or Model 3, one of them, and he got a Cybertruck because he had to turn it in for service or whatever it was, and he's like. They keep calling him, hey, sorry, your car is almost ready. And he tells them, take your time. Like, I'm really loving this Cybertruck.
Yeah, I'm good,
so
man.
Maybe they're fun to drive.
Yeah, I'm sure they are. I mean, I'm sure they are. I mean, a lot of the Teslas are good to drive. So, I'm sure. So what do you think that, I don't know, we can talk about the government shutdown, I guess, but I mean, not that our audience really wants to hear about that probably, but I do think that started to impact the market a little bit this past week. I mean, most government shutdowns, we have not seen that this time, but most government shutdowns, previous government shutdowns, the market would sell off about 5%, during government shutdowns. And then when they ended up opening back up, you'd recover it all back, but this was kind of the first week this past week where we really saw kind of an impact where I think, most of the population's like, hey, get it together. Like, this is like, you've had whatever, 37 days or 38 days. Like, let's go.
This is a record now.
Yeah.
I think that this was kind of I'm not going to call it perfect storm because it's been tough on the market, but it hasn't been like crazy tough.
Right.
We're still like in a good spot for the year, but like we had the shutdown. Everyone saw the headlines of this is now a record shutdown. Not a lot of headlines about progress like that coming together. There's pictures that are coming out of, our military waiting at food banks in Germany. Like, that's not a great look either.
Yeah.
And then at the same week, there's all the fear of like the AI bubble, and you've seen how much that's driven our market. And there's two things that happened this week that really, I don't think it popped. It's putting a hole in it a little bit. The first one was there was an interview done, it's like G2 podcast. I forget the name of it, but it's this hedge fund guy, venture capital guy that are interviewing Sam Altman. And they question him on, hey, how are you going to invest all this money across all these different places with these partnerships when your revenue is like 1/8 of it? And Sam Altman said like, well, you have no idea what a revenue is. We're not a public company, so it's more than that. But also, if you want to sell your shares, I can find someone to buy them for you. So he like fired back.
Yeah.
Not great. 24 hours later, CFO of OpenAI is at a conference and is saying, they kind of mischaracterized her words a little bit. She used the word backstop. Everyone kept focusing on that. Oh, the government's gonna have to backstop all this AI investment.
Right.
So that freaked the market out. And then Friday rolls around, our airports are shutting down, all this. So I feel like it was a perfect storm of just news this week.
Well, that, and you had Michael Burry shorting NVIDIA and
Which
Palantir.
Is a quarter late, by the way. It's looking back a quarter.
Yeah, so that's the one thing I wanted to bring up is that, he filed his 13F, which for those that are listening that don't know, is 13F, money managers have to file what their trades were for the previous quarter.
Yeah.
But they have 45 days from the end of the quarter to actually file it. So quarter ends on September, whatever, 30. Does September have 31 days? I don't know. So, yeah. Okay. I can't ever remember that little song that's supposed to help you remember which months have how many days. So at the end of September, he has 40, from October 1st, he has 45 days to file it. He typically files it on the last day.
Yeah.
So if you go back and look at his reports, he typically files it on the last day, but this time he didn't do that. He decided to file it the same day that Palantir reported earnings and to do his, tweet on it or whatever. And so if you go back and look, so if he put that position on in July, August, September, he's behind. So he bought almost $1 billion worth of put options on Palantir.
Which sounds like a lot, but put options are different. It's not, you're not buying shares. So
Correct.
It's a little different.
Yeah. So it's a little bit different, but so it gets all these headlines, but he probably bought those when Palantir was probably in the 160s or so. Like if you look, so he's probably still not even up on that trade. Now he probably made a lot of money back over the past week because it went from 200 back down to like 173.
But he's still,
but it's still probably, so that's but the thing is, you get these big headlines, but there's no context added to them. Most investors have no idea what a 13F is. They don't understand that it's something that looks back, that's something that happened months ago. And that they don't know, did he close it out yet? Does he not? They don't know that it has 45 days to file it. I mean, there's all these different things that, just isn't anything that grabs the headline because you just get the big headline number and then everybody kind of follows him into the trade.
The amount of times I was sent that article this last week of like Michael Burry's, calling a bubble, whatever. And you just got to ask why, what is going on here? And also contextually, like, if you look back, he tweets. He loves his tweets.
Right.
There's X would post or whatever we call them. And but he deletes them 48 hours later.
Oh, really?
He never holds them.
I didn't know.
So there's pages called Burry Archive, so people will screenshot it and put it there.
Yeah.
But one of his, like, you told me this a while back, and I think it's true. It's tough, but it's true. Is that you're like what do they call it? The one hit wonder, and then you try to recreate it. It's very tough.
Yeah.
So he made his name because he was in The Big Short, the movie, and he
the 2008 financial crisis.
Made a ton of money from that, right? And now he just manages his own money. He no longer manages outside money.
This is his family office.
But so he does these tweets, and when the tariffs hit April 2nd, he tweeted out, "Sell everything."
Right.
And that was, you sold at a very low price.
Correct.
And you missed out on all of this.
Yeah.
So just because you're right at one thing doesn't, not saying he'll
be
very
right
smart
at
guy.
some point. He'll be right again at some point.
And even Howard Marks says that, like, his son gives him a hard time. He always brings it up in interviews. His son's giving him a hard time. Like, yeah, you were right 2 out of 18 times or 3 out of 18 times,
Right.
whatever it was. And it's, like, you can't take everything that you're reading for literal, because at the end of the day, this is a voting machine. The stock market is a voting machine. Michael Burry placed his votes. The votes aren't playing well right now, but that doesn't mean that he's not going to make votes in the future that will.
And it's also too, it's just, if you're just a, regular investor, I mean, there's times to be more aggressive and there's times to be more cautious.
Yes.
We've had a really good run over the last 3 years. Obviously, that probably says, hey, I should be a little bit more cautious. I should probably be very much more strategic on, should I take some profits? Should I, wait to add to some of these positions? I mean, things of that nature where you trade around the positions. But for the most part, you should be owning things that you really like.
Mm-hmm.
And, this, Michael Burry, sell out, buy back in, sell out. I mean, it's not great tax-wise. I mean, I don't know. It's not my personality, but it's just like, okay, maybe I'm a little bit less aggressive. Maybe I get a little bit more defensive. Maybe I look at buying something like Procter and Gamble that's really been beat up, all the consumer staple stocks that nobody wants to own. And it's like, what do I think, kind of looking where other people aren't, but I don't know. I just don't like the like all in or all out. I mean, it just doesn't really work well for me.
There, that's the big thing now is like, is there this sector shift, right? Are we like people taking money out of tech and moving it into like the waste management, the Cokes, that kind of situation? But yeah,
I mean, it's not like these companies. I mean, the majority of the companies, especially the ones we talk about, it's not like they're not making money.
Palantir,
they're making tons of money.
So they always say there's that saying, follow the dollar, right? And everyone thinks, oh, the dollar's the revenue. Follow the revenue. Where is the money going? I agree with that. But I also, like, if you contextually take in like Palantir's business model, read up on Palantir. Look at how they structure their business.
Yeah.
The thing that they do different, they've done a few things different, but the one thing right now that is other businesses are starting to copy is that when you're a tech company, usually you sell the software and then Accenture or whatever consulting company implements it. You pay the Accenture, right? The software company sees that as, this is great because we're in the software business. We like keeping our overhead low, great margins, whatever. So we're not going to have this be part of our business. We're just this is going to be a secondary economy that Accenture can pick up on. So we'll sell you the software, go find somebody else. Palantir does not do that. They call it forward deployment engineering, where it's part of their business. You have to spend so much with them to get this, but they will send 1 or 2 engineers out. And the minimum for doing that, for that human capital of 2 people, is $10 million. They saw that as an opportunity. Now, what are we seeing? Amazon, they have now part of their business that's copying that. All these other companies are copying that business model because they're like, wait a second, we're leaving so much on the table. We thought the customer would only be willing to pay X. And that's why we didn't want to do it, because we thought it was below our margins, right? That's not the case. The customer's willing to pay for it if it's going to work well. If it
has value.
Yes.
Yeah.
So,
and theirs is pretty much instantaneous.
I mean, what a great position for Palantir. And going back to following the money here is where other companies investing their money. Amazon, like I said, now has a business model. They call it technical external services is their version of that.
Okay.
So it's like these companies are standing up these portions of their business, throwing people at it, hiring for it.
Yeah.
Right. Because they see Palantir is making so much money from it. We should too.
Yeah.
It'll
just be interesting to see how all this kind of evolves and changes over the next couple. I mean, it's pretty exciting. I mean, it's an exciting time. I mean, there's a lot of changes going on. I mean, it'll infiltrate everything. I mean, it'll just be, and you're already starting to see it. So, doesn't mean that the market can't get overhyped from it. That all of a sudden, I mean, the market normally, I mean, it can get too overhyped and it can get too pessimistic. So too optimistic versus too pessimistic. But I mean, you still have to be kind of on the dance floor to take advantage of it.
So I know you mentioned like some practical stuff that people could do, either trading around a position or maybe buying some of the companies that they're like real, have some ownership in, of like, okay, I know I've always loved Coca-Cola. I'm going to buy some Coca-Cola, waste management. People got to take out the trash, whatever it is. What else would you recommend that people be doing right now?
I mean, if you think that like, okay, I've owned these companies, I have a large profit, you can trim some. I don't understand why people think some investors think it's all or nothing.
Yeah.
Like I own Amazon, I either got to sell all of it or I got to buy it. It's like you can sell, but here's the thing, like Amazon really hadn't been up that much. So Amazon was only up 4% for the year when they reported. And then they had a great report. All of a sudden you see all this momentum go into them. Now they're up about, I don't know, probably about 10% for the year, but Amazon hasn't had a great year. I mean, they really haven't. And so, it's one of those things, like if you're going to sell, you got to be right twice. So you got to be right when you sell and you got to be right when you buy back in. So it's, maybe we look around, maybe if you have some of these winners that have done well and all of a sudden the value of them has gone up in your account, or, your account's gone up. So your percent, maybe that was 8% of your portfolio. Now it's 11. Maybe you trim it back 1.5% and you use that money and you put it into things that haven't done well, like Procter and Gamble's had a terrible year. some of these have just kind of not gone anywhere. So, I mean, you can move those around, but still keep your core positions.
Yeah. I think this is the emotional side of the money. Is like the emotional decision to sell is kind of can be a hurdle for some people. So when they do it, they want to do it right then and not have to think about it.
Mhm.
Like I have friends that work in the tech industry and they get a lot of employee stock, right?
Yeah.
And so they have all this exposure to this company that they work at, which
Yeah.
also is additional risk because when the stock doesn't do well, you may get laid off. So you're double dipping in your risk.
Right.
And it's, hey, like you might want to, this is a lot of your portfolio, start trimming.
Yeah.
No, I'm going to wait. I'm going to wait. I'm going to wait until I can sell it all. And it's like, no, you don't have to do that. And then now the stock's down like 8% in the last
Now they
week.
don't want to.
And now they don't want to, which is that sinking ship fallacy. Like I'm going down with the ship,
Yeah.
whatever it is.
I mean, it's the other thing too. Like the market's done well. It's okay to trim some, and you don't have to put it back right away. You can have cash. I mean, like, the thing is if the market does have a correction, I mean, and you have to have some money to be able to put in, like on a liberation day.
Yes. That's the only thing I would add is like, you sell out, or not sell out, you sell portions of it, right? So you have you're more a little flush with cash. Don't go spending it, like be in a position like right now, personally, I am pulling back on any unnecessary spending because I do want cash, right? Like I want the cash for the opportunity if it presents itself. And if I'm selling portions of it and I see that cash, I mean, maybe not my personality, but others is like, oh, always wanted to buy this, whatever it is. Try to keep cash, cut back on the spending if you can, because if there is some volatility, right? Everyone's worried about the negative. Think about the positive. When you buy at that clearance price, the same reason why this is the funniest part. Sorry, I'm going off on a rant here, but everyone goes to Walmart, waits around the corner to save 30% on a TV.
Yeah.
But nobody does it with a stock. Like why? I don't get that.
It's just they just get nervous. I mean, it's because a lot of times they're seeing everything drop, but it's too like, and if you have to have the activity, just put some limit orders in. Yeah. I mean, put some limit orders in. But yeah, I think it's just a natural tendency for people. And that's the hard part too with investing. You don't know where people bought in. I mean, a lot of the stocks that we have and a lot of the investments we've made money on in the last year, and I've said this numerous times, are the investments that we made in 2022 when the market wasn't doing well.
It's always, I mean, not always, but it is often the case. Yeah.
So, I mean, so I am looking at some of those that have pulled back, which are the waste managements. There are some companies where it's like, geez, I mean, their PE ratios are really low. Like they've really gotten beat up. I mean, so, I mean, it just takes a little bit of effort to go look at, but, well, thanks for joining me.
This was good. I missed this.
Yeah. Well,
this
I guess we'll be back. Yeah. When, semester's coming up, we'll see you in Christmas when you get a break
after finals. Yeah.
After finals. All right. Well, as always, hope this was helpful for you. Don't mistake activity for achievement, and we will see you next time. Thanks, everybody. This podcast contains general information that may not be suitable for everyone. The information contained here should not be construed as personalized investment advice. There is no guarantee that the views and opinions expressed in this podcast will come to pass. Investing in the stock market involves gains and losses and may not be suitable for all investors. Information presented here is subject to change without notice and should not be considered as a solicitation to buy or sell any security. Right Our Equities does not offer legal or tax advice. Please consult the appropriate professional regarding your individual circumstance. Past performance is no guarantee of future results.